Hey everyone, Meet Kevin here. Welcome back to another episode of the Meet Kevin Show. And I hope you've got your prayer potions ready because the stock market is basically teetering at new all-time lows for this year. But we've got someone to help us at least have some perspective into what the heck is going on and how they might be able to help. As usual, these interviews are never paid. However, I do have an affiliate link to Robinhood link down below. This interview is not paid though. Welcome back to the channel though. Vlad, the CEO of Robinhood. You were last on my channel 17 and a half months ago, just days after GameStop passed $420 per share. It's been a while. Welcome back.
Thanks for having me. It's good to see you, Kevin.
Absolutely. So the first thing I got to know is Jerome Powell on Friday had some pretty tough, or I'm sorry, this Wednesday had some pretty tough things to say. He told us the housing market might face a difficult correction. Those were his words. For the first time in the tightening cycle, he made it clear that the Fed funds rate would actually stay much higher for much longer than anticipated. And now he's kind of changing what's important to the Fed as well. Instead of just focusing on inflation, he wants to see job openings go down. So as a CEO, Vlad, are you doing your part? Are you reducing job openings? And when is this stock crash going to end?
Well, I think we've all learned to listen very closely to what Jerome Powell is saying, and I think the good thing is that the Fed does tend to telegraph their intentions pretty well, and so you have been hearing a lot in the past few Fed meetings that it's almost like clockwork, right? Like inflation is high. We're concerned about inflation. We've got the tools to combat inflation, and I think he says we've got the resolve to do it. And, that's pretty strong messaging. So any shift in that messaging, as you said, is interesting, right? If he's talking about, the housing market and potentially, looking at pain that consumers are feeling. Maybe at some point he starts talking about what's going on with consumers in their retirement accounts. That to me, and I'm no macro theorist, so take this with a grain of salt, signals that, maybe he feels that that Fed rate hikes are sort of going to be decelerating over time. And at some point he's going to turn attention to sort of the pain that is being caused not just to the housing market, but to things like people's retirement portfolios. So these things are always gradual. But, I think we should assume that it's very intentional and very, very deliberate, everything that he's saying.
Yeah, absolutely. And I mean, what's going on with the Fed has really led the Treasury market to skyrocket. I mean, some of the Treasuries are now paying, 3 to 4%. Those are pretty complicated to trade, though, for people, and they come with some market risk in case you need that instant liquidity. And I got an email this morning that y'all are at Robinhood are announcing 3% yield on cash. I mean, this reminds me of like a few years ago where it was kind of like a race to see who could offer the highest yields. And I think right now you're like the only people offering 3% on savings. Can you tell me a little bit more about this, or cash sweep, I think you call it? I want to make sure I get the verbiage right. I just passed my 6 Series 65, so I got to be careful with the verbiage.
Oh, congratulations. Yeah, I mean, we were talking about the Fed just now, right? And obviously there's a huge influence on how the markets are trading and asset valuations. But the one really positive thing is that interest rates are increasing. The federal funds rate goes up, and that gives people an opportunity to earn more interest on their cash. And your typical bank is not paying you any interest on your cash. You look at the largest banks, they see this as an opportunity to improve their margins, to generate more NIM or net interest income. And we see that as an opportunity to take care of our customers. So even though they're looking at this and saying, well, the stock market is highly uncertain and volatile, what we can offer them is 3% interest, which, as you mentioned, is a very high rate. I'm not aware of anyone that's offering a similar rate right now. And that's something that we're offering to our gold members with no cap. So even when they're not investing, they can generate 3% on their cash. And you mentioned the sweep. One thing that's, I think, really powerful about this is in a typical bank account, you get $250,000 of FDIC insurance, right? Um, but through the mechanism that we've built in Robinhood, we actually connect to a network of banks. And so we can sweep your cash to multiple banks. And that FDIC insurance multiplies per customer. So we're actually offering up to 1.5 million in FDIC insurance. So you not only get the high interest rate, but you also get added security and safety with the higher deposit limit.
That's really interesting. It's almost like dividing to 6 different banks, so that way you can have up to 1.5 million FDIC insured with 100% liquidity, getting a 3% yield, right?
Yeah, the idea is for it to be seamless. I mean, you should
Wow.
uh,
Yeah.
you can withdraw, you can deposit, you can invest seamlessly without
Right.
really being familiar
And
with
see,
what's
that's
happening
really
in the background.
yeah, that's huge because really, a lot of folks are saying, okay, well, for example, I saw someone on Twitter. They're like, okay, Kevin, but the treasuries are, I could get a treasury at 4% right now. Well, but the problem with that is that's not subject to market risk. That is subject to market risk, those treasuries, right? So if there's a really good opportunity to buy, let's say, a stock that comes up in 2 months, but you're locked up in a 2-year treasury, you could be big time upside down. Whereas here, it's just 3% on your cash and you've got the liquidity whenever you want it. Am I right about that comparison?
And it's also quite complicated to actually purchase treasuries for
Right.
day-to-day consumers. Um, I think we want to keep it as simple as possible and just give
Yeah.
you the best deal on your cash. And
Right.
you shouldn't. I think I think the reason customers perhaps aren't as engaged with treasuries, besides kind of the user experience, is like you mentioned, the illiquidity, the fact that you have to have your money locked up, and if you need it either to make an investment or to buy something, then it's not available. And typically, although not always, you have to lock it up for a really long period of time to get access to the higher
Right.
rates. So
Yep.
treasuries,
That's a good point.
CDs, I think they're useful, but we find that there's value in this product to give the
I
highest yield
agree. And
possible, daily
I
liquidity.
mean, and not only that, but I think a lot of folks, when it comes to Robinhood, it's so easy. For example, I mean, I'm a Robinhood customer. I've got an affiliate link. It's metkevin.com/Robinhood. The nice thing is, it's just so easy to have your money there, throw it in to where you're receiving a 3% yield with your gold membership, and that's it. That's all you have to do. Like you said, you don't have to worry about treasuries rolling off or setting up a treasury direct account and understanding bond price. I mean, that's crazy. So that's really good. What's actually also kind of crazy and kind of brings me to my next question is in October, after I ran for governor in California, which was really awesome, crazy experience, got like almost 1 million votes.
I'm sorry
After
that I
that, I'm
can't
like,
call you governor. I thought, yeah, that would have
I
been
know, right? Thank you. But it's probably for the better. But
fun.
after that run, I'm like, it'd be interesting and I know again this sounds crazy, but it'd be interesting to get into the brokerage business. And so I was in discussions at one point with Apex, and I'm like, man, it is actually really difficult to make money in your business. Was one of the things I realized, unless you have a lot of scale. And I think y'all have really good scale. But I think the market a little bit is also beating you up, right? Just like everybody's getting beat up in the market. In December, we're like, okay, no, this is not the business that we wanted to get into because, again, you need that massive scale. I think you've got over, 14 million users as of your last quarterly report actively still trading, which is
Yeah.
phenomenal. And you've got like $7.6 billion of cash free of liquidity or as free liquidity. Why is the market valuing you at basically only cash? What's going on there?
Yeah, well, the market, I think, tends to behave erratically in the short term. I mean, you're seeing
Mhm.
not just Robinhood, but lots of great companies with, what I believe are solid fundamentals just being repriced. Multiples have collapsed. Generally there's like this risk off feeling that participants are having, and I think a lot of it just stems from what the Fed is doing and broader uncertainty. We don't know what's going to happen with Europe. There's obviously tensions in Asia. um, the inflation is continuing to be high, and people aren't quite sure how that's going to play out in all sorts of things. So it's a complicated system, and I think that's leading to just broader uncertainty. But our focus on Robinhood is uh, we're always going to be focused on the long term. We've taken a lot of steps to actually make sure we respond, but we don't overcorrect. So we've done a
Mhm.
lot of making sure that our costs are well structured. That we've done a lot of lowering of costs, both headcount and also things like software efficiency and kind of cloud infrastructure. So a lot of places we've been looking to see if we can become lean and efficient, like we have been during uh, almost the entirety of Robinhood's history up until COVID, when things got away from us a little bit. We've made a lot of progress, but I think um, we've also continued to focus on building new products and making
Yeah.
investments and actually innovating. So um, this year we've had probably our most productive year in terms of like rolling out new things
Wow.
and building things for customers. So I think all of that sets us up to um, do well and be a sustainable business in even tough economic times, and kind of benefit disproportionately as things will inevitably recover over the long run.
Yeah, I think it's commonly said that some of the best innovation occurs during market corrections or even depressions. I think Kathy Wood is someone who regularly argues that as well, and that's really good to hear that you almost feel like because of this, you're kind of forced to be more efficient, more productive, but then also you're innovating at the same time. Because I mean, regardless of what individual opinions might be for the positive or the negative, the reality is Robinhood and y'all helped a lot of people get into stocks and trading and investing, right? People who previously hadn't been investing, and I think y'all deserve a shout out for that because that's wonderful. Avandatrack says that so far this year, retail as a whole has not capitulated. They haven't had a single day of net selling, despite how hard this year has been. Everybody's almost collectively, all right, put our head down. Let's buy. Let's increase our portfolio and invest for the long term. And I think y'all deserve some of the credit of helping people get into investing, even though times are hard right now. It's great.
Yeah, absolutely. And I think what we've seen from the very beginning is we have customers that are typically younger than at most of the
Mm,
brokerages, and they're in it for the long term. That's why we have so many customers asking us to build things like retirement accounts. People are saving for retirement earlier and earlier. We've seen our customers actually become very cognizant and sort of recognize that they could be earning more on their cash, right? Whereas the
right.
conventional wisdom is, customers at the big banks aren't sensitive to it. They don't realize, and I think that's why the big banks have been keeping their cash yields so low. And when the Fed raises rates, they maybe raise it a basis point or two, but not to where they should be. And
Right.
so our younger customers kind of I think they're smart, they're savvy, they're paying attention to a lot more sources of information, and we have to build products to adapt to them and to help them navigate all of these environments that we're in. And I think we've done that. This year, not just 3% interest on cash, but things like stock lending. That allows you to generate passive income as a customer, even if you're not trading. We can lend out your stocks on the open securities lending market, and you can actually get decent yields. And this is a product that has been available to rich people predominantly. So if you're
Mm,
at a typical discount brokerage, you need a large account balance. So if you're an institutional customer or high net worth individual, you get access to some of these things. And Robinhood has historically been all about giving that access to ordinary people. Um, and I
nice.
think that
Nice.
this interest rate's a good example, right? If you're a high net worth individual and you have access to like these institutional grade money market funds, sure, you can get access to 2+% interest. But for the everyday person, that interest is also very valuable. And we're all about giving those tools that have previously been available only to the wealthy to as many people as possible.
Nice. Yeah, and talking about securities lending kind of brings up this idea of regulation around what happened with GameStop and the DST. I don't even remember the acronyms and all that stuff. What
Yeah.
kind of changes have you seen since Maxwell reclaimed her time from you? I remember I watched every minute of that.
I couldn't
What's
even get a
changed?
word
Has
in. It was
Congress
too
done
hard.
anything?
Um, One thing that has happened is actually the SEC got behind kind of our call to modernize the settlement times. And this stuff is very arcane, but
Yeah.
uh, the simple way to put it is a lot of like the back end infrastructure behind how trades are settled and cleared. And I think we talked about this last time I was on your show, is
Mhm.
running on mainframes from like the 1980s, and that's why settlement takes 2 days. There's actually no reason for that to happen.
Mm.
That's why you can't trade stock and invest in equity markets 24/7. So there's a lot of modernization to be done, and I think instant settlement is one of those things that is not just going to lower costs and lower risk, but it'll prevent like weird things like GameStop and uh, and trade interruptions from happening again. And then the SEC actually supported that and made a call to gradually move to T+1, which is next day settlement, and eventually
Nice.
go to evaluate going to real
T0.
time. Yeah.
Wow. Wow, that's incredible. Okay, well, good. So some progress here. Now, just quick math with 3% on your savings yield, which you've just announced today. That's you have to be a gold member. That's about 1.5% more than you would get if you were not a gold member at Robinhood. That's about $60 a year, $5 a month. You probably need to have about 4,000 bucks sitting for like as your break even point there. So for anyone over that, I mean, 3%, this is the easiest way to get 3%. Like put your money in, get the 3%. That's great. What about folks under that? Like, how does your
Yeah.
demographic split? We've got metrics. I think the last metric we heard was something like the mean account balance at Robinhood is like $250, but the median is like 4,000. Or I may have gotten those mixed, but either way, like, what do
Yeah.
you think? Can 70% of people benefit from this at Robinhood, or everyone, or what's your take?
Well, our idea behind the gold offering is if you're a Robinhood customer and you don't have gold, you should get a competitive rate on everything. So the
Okay.
1.5% that you get as a non-gold customer is still something like 11 times what the national average is. And if you're a gold customer, like we'll strive to get you the best rate available. And right now that's interest on cash, but gold offers other benefits as well. We have a lower margin rate, we have higher access to instant deposits, we have
Yeah.
Morningstar research reports, level 2 market
Oh,
data.
did you
So
just add the research reports?
the research reports have been there for a while. Yeah. So you
Okay,
you, you
I
have
missed that.
access to Morningstar research, which is high
Nice.
quality. Um, but yeah, the idea is we want to make it accessible to a wide range of people. But if you're a Robinhood Gold customer, you should actually benefit from a wide variety of things. And over time, it should be a no-brainer for every Robinhood customer to be a Gold customer. I mean, if you think about it, $5 a month right now, that's like I think with inflation, that's like how much you would pay for a cup of coffee at Starbucks, right?
Yes, soon it'll be a shot of coffee. And I'm not talking about an espresso either. It'll be like drip coffee. Shot will be $5. Oh gosh. Yeah, so that's actually interesting, the Morningstar, because you're right. There are other benefits that you have: margin, instant deposits, Morningstar. I subscribe, for example, to Yahoo Finance, and one of the only reasons I actually subscribe to Yahoo Finance is to get the Morningstar research. So if
Yeah,
that's included in gold, maybe I don't even need Yahoo anymore. Not to diss
yeah,
Yahoo, obviously.
yeah.
So, what else, Vlad? Like, what are you working up? Who are you trying to take down? Is it Moomoo, Weeble, M1 Finance? I know you all want to coexist, but like, what products are you bringing? What is it? A credit card, debit card? What's coming?
Well, we launched a debit card earlier this year. So the Robinhood Cash Card lets you direct deposit your paycheck and actually seamlessly invest it into either stocks or crypto. So you can actually, there was all of that talk about how people wanted to get paid in Bitcoin. Um, we would allow you to do that just automatically without even your employer being involved.
Wow.
We allow you to do roundups through that. We actually give you a bonus on the roundups as well. So the goal is to be the best first spending and paycheck product. And then a big focus is going to be on retirement as well. So Robinhood, as you know, has been very good at bringing new people into the market, first time investors, millennials, Gen Z, and they're interested in retiring at earlier and earlier ages. And we think, retirement as a space has been really kind of boring. It's
Yeah.
not been considered, the sexiest thing to get into, but actually I think there's an opportunity to make it really interesting for people and to build a great product there. And if we can get millions more people retiring and setting themselves up for that, I think that could have a really positive impact. So, we've been working on that. The cash card, more high yield products, like we mentioned, stock lending and this new gold product. And we've also been working on our advanced investor products. So building a lot of things for our options traders, our crypto investors, and making sure Robinhood continues to be the best place for them to grow their portfolios and trade over time.
Nice. Very last question. It might be a quick one. I saw in your last quarterly report that you've reduced some of the revenue that you're getting from, I think it's the Jump Trading Group. Citadel's up a couple percent at like 21%. What's like, are they just giving the best pricing? Is it like, is there anything you can say to them, like to anybody watching right now when they hear that word, like, should they feel bad about that? Or is it actually just, look, hey, they offer a good service?
Yeah, the way we think about routing our orders across any asset is we have market makers and we have lots of them competing over who can give our orders the best price improvement and the best execution quality. And especially in equities where a lot of like attention has been paid, customers have never gotten a better deal. I mean, you're talking about spreads tightening over time, commissions going from $10 a trade to zero in the past couple of years. Retail customers getting better executions than if their orders were sent directly to the exchanges.
Wow.
So, yeah, we work tirelessly to select counterparties and to route to counterparties that give customers better execution quality and better price improvement over the NBBO.
Awesome. That's awesome. Vlad, we're out of time. Thank you so much. For anybody watching, there's a link below. It is an affiliate link. I'm not paid to do an interview with Vlad, and that's totally fine. I don't want payment. I love the conversation that I'm able to have with Vlad. Vlad, you're welcome back anytime. Any final thoughts? And congratulations on launching this 3% yield for your gold members. Personally, I think that's great. Way more liquidity than treasuries. And I think it's a great opportunity people should take advantage of with the cash they have sitting around. Any final comments?
Yeah, no, just thank you. Thank you for having me on. Hopefully the 3% yield helps customers during this time where, markets are volatile and investing can seem a little bit scary. But also remember that times change, and over the long term, US equity markets have been just a tremendous source of wealth creation and economic opportunity. So I think it can be easy to like get caught up in the inflation and everything and all the problems that we're having. But I still think it's important for people to start investing as early as possible and build that habit for the long term.
Awesome. Awesome. Thank you so much, Vlad. We'll see you
Thanks, Jeff.
again in the next one. Bye.
All right. See ya.